Another thing is, of course, I am blocked. That's typically what happens with these people, is that the last thing in the world they want is other people pointing out how stupid their trades are, how reckless it is, and how it's all going to blow up in their face. That's not part of the game. What they want is to seem, like a professional, seem like they know what they're talking about. And anybody who disagrees, of course, gets blocked. I only made one single comment and I got blocked. We'll get into that later. But the first one is the short UVXY and leave it alone, right? So here we go. He says 2 years from now, the UVXY will be below 10. Currently, it's 55. While I can't guarantee it, I do. So very reassuring. He's guaranteed it. So we're all good here. If short volatility at VIX 30, it's only a matter of time until you start printing money. Put a small part of your portfolio here in short UVXY and leave it alone. So this is the structure that we see kind of repeatedly. It's a question that comes up all the time. I think we should probably talk about it. So when you're talking about doing something like this, let's just say 5%. Very likely they, in the thread, he was talking about 10 or 20. I'm going to be super generous here and just say 5. So what could happen? Well, if you short the UVXY with 5% of your portfolio, like he said, 2 years from now, it probably will go from 55 to 10, right? The odds-on favorite is that's probably what's going to happen because that's what's been happening for so long, right? Most of the time, if you're short volatility and you just close your eyes and wait long enough, you will probably make that. So best case scenario, you make 4% over 2 years. So you're basically doing this to make 2% a year. Not really that great. But what could go wrong? Well, of course, the short UVXY, it can, and I underscored it will, spike 1,000% or more. It's happened multiple times before. It will happen again. COVID, it happened. We've had financial crisis. We've had dot-com bust. We've had flash crash. We've had Black Monday, 1987. We've had the Asian currency crisis, right? European debt crisis. It happens, and it will happen again. Now, noteworthy here, of course, the government did spend trillions of dollars to backstop the economy to make sure that this doesn't happen, to make sure that it bounced smoothly. But of course, next time around, that might not be available. But the point is, if you only allocate 5% to a short UVXY trade, it is an unlimited loss trade. So when it spikes 1,000%, you've lost half your portfolio. You haven't lost the 5% that you allocated. You've lost 50% of all your money, right? That's pretty bad. But it's even worse than that because, of course, the other 95% of your portfolio is probably also net long the market, right? There's very few people, I would say nobody, who has 95% of their money that's short the market. That's not how hedging works. You don't put 95% of your money as a hedge, right? So 95% of your portfolio is also going to be subject to whatever terrible event is happening. And we are long overdue for one of these things to happen. The recession cycle in the United States is about 6 to 7 years. We've made it an awful long time with an awful lot of government spending and Federal Reserve monetary manipulation. They have managed to go a pretty long time without losing control of one of these market crashes. Like I said, quite resilient. It does buy the dips. But what happens when your 5% allocation costs you 50 or more? And the other 95% is down 30 or 40% or 50%. In the financial crisis, it was down 56. Well, what happens? All your money is gone. So again, best case scenario, you make 2% in a year. That's the goal. Worst case scenario, all your money is gone. Sometimes I like to watch stand-up comedians, and there's this really funny comedian who's Nate Bargatze. He's got this bit. He's one of those dry pan comedians, but he's got this hilarious bit where he's talking about his wife selling useless stuff on Facebook Marketplace, right? He's like, she's selling this chair, this useless chair for $5. And some random stranger shows up at our house. And Nate's like, okay, best case scenario, we receive $5. Worst case scenario, our whole family is murdered. And the whole bit it's just hilarious. He goes on about, you're basically just sharing your address over the open internet. Again, we're talking about best case scenario, make 2%. Worst case scenario, your whole family is murdered. You lost all your money. Imagine you had $1 million portfolio and you thought you were the smart trader who's going to do a really small chunk. It's only 50 grand. It's only 5%. That 50 grand is down over 500K and the rest of your portfolio is down the other 500K and you are bankrupt because of this. That is not what could happen. This is not an opinion. This is not like, hey, better be careful, 1 in a billion chance. No, this has happened already and it's going to happen again. It's almost like these people are desperate to lose their money. Like they're trying their best to figure out ways to lose their money. This is Mr. Z Contrarian 1 right here. This is probably what he's doing right now today. He's looking at the market thinking, well, I'll just sell way out of the money options. It'll never get there. That's what they're doing.